watching Business World Live. I'm Danie, Laurel.
And I'm Jess Delos Santos. It's the start of a new trading day, but first, let's go straight to our top story. The Philippine Exporters Confederation, or Philexport, expects export revenues to hit at least $100 billion in 2022, lower than the government projection of $122 billion to $131 billion. Philexport President Sergio Ortiz Luis said the global economic slowdown caused by the pandemic and the calamities that hit the country this year will be the major factors for the potential shortfall. He said agriculture-based raw materials and equipment in areas affected by the Taal eruption in January and the typhoons last month were destroyed. The Philippine Export Development Plan 2018 to 2022 is a roadmap prepared by the Trade Department in a bid to increase good and services exports revenues by an annual growth of 8.89% to 9.96%. Ortiz Luis said government aid will be crucial, noting that generating at least $100 billion in export revenues by 2022 will depend on the extent of state assistance for the industry, which has been heavily battered by the COVID-19 pandemic. Latest data from the Philippine Statistics Authority show that exports from January to September fell 13.8% to $45.9 billion. Overall, the Development Budget Coordination Committee expects a 16% contraction in exports this year. Despite this, Philexport said there has been some improvements as the lockdown restrictions were relaxed to spur economic activity. Meanwhile, S&P Global Ratings says the series of typhoons last month will hinder economic recovery and fiscal and monetary measures are necessary to provide support. Now, Metro Manila will remain under general community quarantine during the holidays along with 7 other areas. During his post-IATF meeting speech last night, President Duterte announced that the capital region, together with the provinces of Batangas, Lanao del Sur, Davao del Norte, and the cities of Iloilo, Tacloban, Iligan, and Davao, be in GCQ status starting today until the end of the month. The rest of the country, on the other hand, will remain under a more lenient modified GCQ for the same period. This comes on the heels of Metro Manila Mayor's announcement that they would give their share of fund for vaccine procurement to the national government. The government has also recently signed an agreement with British drug maker AstraZeneca for 2.6 million doses of their COVID-19 vaccine. The government is set to borrow about 73 billion pesos from multilateral lenders, domestic and bilateral sources to purchase vaccines for 60 million Filipinos. National COVID-19 Task Force Chief Implementer Carlito Galvez says a realistic timeline for the vaccine rollout in the country would be by the end of 2021 or early 2022. A best-case scenario would be by the second quarter of next year. Dan, the export recovery is dimming, but you have fresh manufacturing figures for November. Give us a lowdown.
All right, it's a bit of a mixed picture here. You can see on my terminal how we did for the month of November when it comes to the IHS manufacturing PMI. All right, better than October in the sense that we are now at 49.9 compared to 48.5 in October. But nevertheless, that's still in contraction mode. Recall just that anything below 50 signals a contraction compared to the month prior. So it's still not necessarily the recovery or the growth that we've been hoping for. And this, of course, compared to last year, we were at 51.4 in the month of November. Nevertheless, the bright spot here is that our output rose to 50.2, and that does signal an expansion, at least when it comes to output. That's versus the contraction of 48.4 in the month of October. So this output growth is the highest reading we've seen since at least June 2020 and reverses the contraction trend. Another thing is new orders have also risen versus the prior month. So yet again, we're going to be seeing how markets digest that. Will they be happy with a 49.9 print, given that it's still better than the month prior, Jess?
All right, now that's out of the way. Let's usher in December today. Can you believe it that fast, Dan? One last month to deal with before 2020 ends. What are the markets looking like at the open?
All right, we don't know, Jess. Are we happy that it's December? Are we sad that it's December? I don't know what to feel about this day being December already, but nevertheless, markets don't seem to be cheering the first day rather of the end of the year. That's 0.3% down, still sliding to 6772.40. This, of course, after markets had a breather yesterday for Bonifacio Day, so nobody was trading, and that comes after we also saw, markets slipping even ahead of yesterday's holiday. Now, let's take a quick step back because I did want to position how our markets opened vis-a-vis the rest of the world that was, of course, open yesterday. You can actually see in Wall Street, they did feel a pullback here. You've got the S&P 500 down by 0.5%, the Dow Jones as well, the Nasdaq rather flattish, but still tilted towards the downside. This comes after they slipped from record highs. S&P had dropped the most in more than a week yesterday, but it still closed out November at the best month since April. So despite the fact that there was a pullback, November seems to have been a pretty good month for global equities. You've also got the tech-heavy Nasdaq. It was trailing in November. It finally touched a record high on Monday, and you've got global stocks posting its best month on record, not just during COVID, but on record, and that was November. Gold, meanwhile, retreating, Bitcoin rallying. So a lot of, risk on sentiment here. What has been driving this? Well, of course, rapid progress towards a COVID-19 vaccine. And that has brought some confidence back to the market. You've actually got MSCI Index of Global Stocks up by 12% in November. Now, you've also got, in particular, Moderna. That surged 20% on Monday after the company said that it plans to now request clearance for the COVID vaccine in US and in Europe. So what are they saying? The data will be reviewed on December 17th, so in just a couple of weeks. That vaccine was 94.1% effective in the final analysis. So after this public meeting on December 17 with the FDA, possibly daw it can actually already be available from 24 to 72 hours after that meeting. All of the inventory will be shipped to the federal government, and they expect to ship, get this, 20 million doses in the United States by the end of the year. So that's pretty exciting there. Another thing that to add there is that the new analysis showed that the vaccine is consistently working in older and younger adults as well as minorities. So a lot of optimism there on the vaccine front. Now let's go back to our local index here. Philippine stocks had actually fallen for a fourth day on Friday. That was ahead of the holiday. You've actually got us being one of the worst performers in the world last week. And this according to Rachel Cruz of AP Securities. Profit taking, it has taken over the markets. The recent run-up was way too sharp and hard to justify as well. And overseas investors pulled out close to $66 million on Friday. That's the biggest outflow since August 7. Nevertheless, a lot of exciting trades when you talk about turnovers, because that was actually increasing by 58%, 16.42 billion average trades per day last week. So it's actually quite a lot. And what are analysts looking at this week? We might see sideways movement. Investors might be hunting for bargains. That's according to Japheth Tantiangco of Philstocks. But he also says that they will be reacting to several things. We've reported the PMI, you've reported the exports, but also the possible create bill. How will this be affecting the market? So I just want to point out one specific stock here that is in the news, and that is Mega Wide. They're saying that, despite the fact that halos walang foot traffic sa airports, diba, this entire time, they are still confident on their airport construction project despite this pandemic. So recall that it's 109 billion pesos, Jess, to upgrade NAIA. And that's, a 10-year plan that's together with GMR, which is in India. And they did say that passenger volume is expected to go back to pre-pandemic levels by 2023. So they're still banking on the airport. Meanwhile, they're also planning other land transport hubs. They're looking at 6 towns and cities to build land transport terminals in their jurisdiction. One in particular is in Baguio, and that's already under review. So you've got Mega Wide trading upwards by 5.5% this morning. That's jumping to 9 pesos and 99 centavos, Jess. Now, meanwhile, economists are forecasting that inflation quickened yet again in the month of November. We did have those typhoons hitting us. By how much, Jess, are we going to be feeling the pinch?
Okay, this time around, you have 13 analysts surveyed by BUSINESSWORLD, and it would show that median estimate among these analysts show that they are expecting actually inflation to pick up by 2.7% for the month of November. That's practically within the lower end of the BSP's forecast, which is at 2.4 to 3.2%. At the same time, it's well within the full year target of 2 to 4%. Recall, of course, that October inflation picked up just the same at 2.5%, but that this estimated November inflation is also faster compared to the 1.3%, which was tallied in November of 2019. So question is, what might have caused the uptick? You have already mentioned that, Dan. Of course, the calamities that we have experienced the past few weeks here. In fact, we have Carlos Asuncion of Union Bank saying that, food price increases are typhoon-induced, especially in Luzon, and that basically is going to augment monthly headline inflation. Recall, of course, that Raleigh has caused crop devastation of as much as 5.8 billion pesos. Ulysses, on the other hand, much higher here, damaging crops by as much as 6.72 billion pesos. But, there are other factors here that we have to consider. For one, RCBC's chief economist Mike Ricafort is pointing to global crude oil prices, which reached its highest in 8.5 months. That also led to an upward adjustment in local fuel pump prices and some pickup in energy prices as well. And that, of course, is expected to add to the cost of some businesses here. Recall, of course, that local market prices of gasoline have also experienced a hike during the month of November, while Meralco's power rates were lower due to a reduction in generation charges. Now, Nikki Mapa of ING is pointing to other things there as well. He's saying, transport prices will likely remain elevated, as well as utilities. At the same time, he's pointing out to education expenses rather still being elevated as well due to one of increase in expenditures during the switch to online classes. Now, at the same time, you have John Paulo Rivera of the Asian Institute of Management. He's saying that it's pretty much cyclical as well. Inflation pickup is expected, especially when you have the holiday already near. He's saying that the 13-month pay and bonuses have been released already, and that will actually drive private consumption upwards, but maybe not in the same level as we used to pre-pandemic. Question is, with inflation still benign, will this lead to further policy adjustments? Well, Mike Ricafort of RCBC is saying, that might actually give the BSP further room to actually ease, and that might actually be justified going forward, especially by way of further cut in banks' reserve requirement ratio. Cumulatively, of course, recall that the BSP has already slashed some 200 bips already, and they're saying that they have space for some more and that they won't hold back when it comes to, expediting all these measures within their arsenal, Dan.
Well, just, on the one hand, we want inflation to be picking up because it shows some demand side there. But on the other hand, we don't want it picking up because of the supply side due to those typhoons, Jess.
All right, now let's move on to other stories we're watching. A regional survey found that more foreign firms are looking to reduce their operations in the country as a result of the pandemic compared to those in other Asian economies. The Economic Research Institute for ASEAN and East Asia and the American Chamber of Commerce in Indonesia surveyed 264 firms with operations in Southeast Asian countries. The survey found that 11% of these foreign firms are looking to pack up and downsize their operations. This is higher compared to the rate of firms seeking to trim operations in other ASEAN countries. The number is also smaller in East Asian countries, with only 3% of firms saying they would reduce operations in China and 2% in both Japan and South Korea. The firms surveyed noted issues which ASEAN governments could work on. This includes business recovery support, immigration rules and permits, and tax incentives. The Senate recently passed the CREATE bill, which seeks to lower corporate income tax and overhaul fiscal incentives. The measure is on its way to President Duterte for signing. Now, Environment Secretary Roy Cimatu has ordered the planting of bamboo along the Cagayan River banks to prevent flooding in the region. Following his meeting with the Build Back Better Task Force, Cimatu ordered regional offices of the DENR in Cagayan, Central Luzon, and Calabarzon to ensure that enough bamboo planting materials are available. He also ordered them to start identifying areas along the riverbanks suitable for planting bamboo. Simato says bamboo is ideal for stabilizing the riverbanks because it's durable and fast growing. He adds that it's also a potential source of livelihood for the people of Cagayan Valley.
Okay, let me just scroll back. Sorry for that. I've got a little bit lost. Now, Philippine consumer confidence in economic recovery is the lowest in Asia. This is according to a study cited by McKinsey during the Business World Economic Forum, which was last week. Now, you can see on your screens here, the study showed that less than half of Filipinos are optimistic about a rebound in the economy. 49% are unsure, while 9% are outright pessimistic. The global consulting firm said those in the lower income segments are less optimistic. On the other hand, higher income segments are slowly gaining confidence as companies shift to remote work arrangements. McKinsey Philippines managing partner Christine Romano said that most respondents agree that their livelihoods have been very affected by the pandemic. Romano also pointed out that consumer behavior in the country is changing, with more people using contactless modes of payment. Markets are back from a well-needed breather after a hectic November, but it can go any which way from here on out. We have with us Alvin Limlingan of Regina Capital to tell us which side he thinks the risks are tilted. Good morning, Alv. Welcome back.
Hi, Danie. My pleasure. Thanks for having me.
Okay, Alvin, let's kick off with, some economic things that we need to digest this
Mm-hmm.
morning. First, your reaction to still GCQ until the end of December. Is this something that is disappointing for investors that were hoping for more easing, especially in the capital, and for more foot traffic and for, economic consumption to buoy?
Well, of course, we would rather have less restrictions on mobility to spur economic activity, but you don't want that at any price. Unfortunately, upon the discernment of those in the know among the IATF, they discerned that the cost of lifting restrictions would be higher cases which have a longer term impact. So, simply put, the consequences of lifting the GCQ were not commensurate to the potential reward. So I guess we'll have no choice but to be patient and just live with these consequences.
Does this in any way change your forecast for fourth quarter earnings?
Not really. We did not anticipate lifting of GCQ. One only has to look at the new cases being reported every day. While the decline has been hopeful, it has not been dramatic. So we're expecting a gradual lifting commensurate to the slow decline in cases. But at least we're heading in the right direction.
Okay, let's talk about some indicators that just came out, particularly the
Mm-hmm.
PMI. So, on the one hand, better than October, but on the other hand, still not above 50, whereas you've got other countries in ASEAN actually seeing already some signs of a recovery, particularly China. So, it's been on the growth path.
Mm-hmm.
Is this something shocking or disappointing for the markets, or yet, especially since wala nang lockdowns in the month of November?
It's not shocking. It's actually consistent with our view. Uh, One would really expect PMI to be muted simply because there's no transportation. Anyone who's familiar with running a large scale enterprise, a large scale factory, knows that the biggest challenge now is getting workers to their stations. And since
Mm-hmm.
there's no mass transportation or very expensive transportation, I mean, it's gone up with the limit on seats, that really puts a dampener on the amount of productive capacity. So one would really expect this. Another thing you have to be aware of is that there is much less government spending as a percentage of GDP. We have allocated far less than our neighbors have done, so PMI naturally reflects this.
Are you saying seeing this as you mentioned because of mobility restrictions, or still dampening demand, especially from the export sector? Because why is it that in other countries in ASEAN, it's picking up naman?
Yeah, because yun nga, we are well. Of course, demand is muted, so that's one factor. But again, it's hard to produce things for exports when you don't have the workers ready at their desks. So that's I mean, it's an improvement. It's better than it was
Oo.
last month, but it's still not back to what we would like it.
Okay, what about vaccine? At what extent are the markets pricing in this vaccine, and when it will actually be available, considering that it's likely to be first in the United States and in Europe, and we have a completely different vaccine, the AstraZeneca that that was just signed, and that one is still having a lot of concerns.
Yeah, when you talk to the corporates, they're really looking at sort of recovery later part in next year or even
Okay.
2022 because these things take time to deploy, and you have to bear in mind our logistics. These things require a cold chain. I'm not sure exactly at what temperature this
Mm-hmm.
specific vaccine must be kept, but if you look at the other two vaccines, they require a lot of expertise in handling. Minus 20 is no joke, and you can't have any break in the cold chain. And you can imagine doing that in our country with less than ideal infrastructure. And
Correct.
let's face it, there's still sort of an apprehension with taking a vaccine that was sort of rushed. I mean, I don't,
Mm-hmm.
unless you really have a compelling case, most people are waiting and seeing to see whether they should, there are any negative side effects to this vaccine. And I can't blame them.
Alvin, let's take a look at the index. It's now swung to
Hmm.
some gains here. We're back above 6,800, but far from that 7,000 levels
Yeah.
that we're hoping to sustain. Was this pullback, expected to a certain extent? But why was it that the 7,000 rally was not sustainable? Especially since you mentioned, a lot of things naman were expected. The GCQ was expected, the PMI was expected, even the inflation because of the typhoon, and also the fact that the damages to a certain extent were better than anticipated.
Well, two factors. One, it was the run up, no. So for a while we were the best performing, and usually when you're the best performing one week, there's reversion towards the mean, and you do become the
Mm-hmm.
worst performing. So that's one factor. But the more proximate cause was the MSCI rebalancing. So certain issues were underweighted, and foreigners
Mm-hmm.
had to not had to, but those who follow the index had to sell down their positions.
Let's talk about the foreigners, though, and the fact that they pulled out so much last week. What is triggering
Mhm.
that? Especially since other emerging markets naman have seen a pretty good month of November, and there's a lot of risk on sentiment in the market.
Well, that's the thing about foreign investors now. The world is their marketplace, so they can really go
Mm,
to markets where they get the best return for their investment, as opposed to maybe more domestic investors. So, number one, there was a lot of flows towards the United States. The
okay.
Dow, although it's corrected now, hit a record high. It looks like there won't be much election controversy. It looks like Biden's win is clear and
Mm-hmm.
compelling, and legal challenges, though they may be raised, will not be significant. So that aspect of the political risk there has lifted, and that was a recent development. I think there was he won in Georgia,
Mm-hmm.
so that sealed the fate of Trump there. So that's some new development there. In other markets, I guess they, they were cheaper to begin with since we had a run
Okay.
up, and the response has been better. So it's just simply other markets have been more attractive relative to ours in terms of longer term prospects and pricing.
What's your realistic year-end call now, though, if you have one already, given that it's not very likely that they come back in at least as much as they had gone in an exodus?
Yeah, we're looking at the mid 6,000 level.
Okay.
We're not seeing anything dramatic now. So we're gonna
Mm-hmm.
sort of meander within this 6,000 to 7,000 range. Inflation might be a little higher, but it's within range. We don't see any dramatic improvements between now and December. So I think this is the Philippines. Things will sort of slow down middle of December and sort of coast along till the end of the year. So we don't expect anything dramatic.
Okay, and last question before we let you go, Alva. I just wanted
Of
to focus
course.
on the property spaces boarding. You can see on
Mm-hmm.
my terminal here in the 1 month, at least in November, up by 12%. So that was quite a good
Yeah.
run up for these players that were heavily battered. What's driving this in particular? Because, as you mentioned, a lot of things naman are expected. It's not as if, there's a massive change in the mobility or anything. Is this driven by the REITs prospects, and how optimistic are you actually that those REITs would be well received right now?
Well, several factors. One was the REITs, because the REITs are allowing more capital to flow into real estate and therefore take out existing inventory from developers' hands and bring it to investors who are more happy with that type of return. But for me, it's about the interest rate cut. No,
Okay.
real estate is really a financing game, and if if you want to buy a house, or most people do want to buy a house, we still think there's a demand in that sector, except people don't really have the capacity now. And with rates this low and secured by real estate, perhaps the banks will look to lend to the end user here, if not the developer.
Okay, so a lot of things in favor for the property sector, some more financing available there, but also the
Yes.
fact that easing might still be on the table, especially with the inflation in check. Thank you so much for those insights. That was Alvin Limlingan from Regina Capital.
My pleasure. Thank you for having me.
And that's a first look into the business day. Today is the 1st of December 2020. I'm Danie Laurel.
Catch us again tomorrow at 9:30 a.m. I'm Jess Delos Santos. We are One News.
Got it. Hi, Mase. Audio check lang. Pagka-choppy niya, ang choppy ng video, no? Kahit nandyan lang sa tabi. Hi, Mase. Pa-audio check lang daw.